Welcome, Graham. Luca and I are thrilled to have you here today. Could we start by you telling us a bit about My Later Life Planning and your journey that led to create it?
No problem. Nice to meet both of you. My Later Life Planning is a trading name of My Group Inc. Limited. My Later Life Planning actually works on the basis of equity release for people who take money out of their property for all sorts of reasons. We are members of the London Institute of Banking and Finance. And in actual fact, in November, we were noted as the top firm in the Right Mortgage Network. My Later Life Planning being an equity release broker, we have access to the whole of the market. What does that mean? That means we have access to all the lenders in the marketplace. So we are not just going to tell you about Aviva or Legal and General. There are 11 or 12 lenders in this marketplace now. Basically can be used by anybody who is 55 years of age or over, has a property worth £70,000 or more. The equity release is based on three things. One, the value of your property, the age of the youngest borrower. So Mr. and Mrs. might be 75 and 70, but they'll work it on the basis that the loan is calculated at the youngest age of 70 in that example. No payments are actually required because it works on the basis of compound interest. Depends on the plan. Basically, you can pay up to 10% a year back without any penalties. So in a lot of respects, this is like an open-ended interest-only loan. Your beneficiaries can still benefit. They could pay some of the interest. Doesn't matter. But it actually allows you to release funds for all sorts of reasons. And before this trusted escapade, it was more I want basis. Now it's a needs basis. I need more money at the end of the month. I need to pay this bill. I need to pay that bill. I need to pay for that care. I need to pay for people coming in to help me. And it's more now of a need basis than a want basis. Yeah, people were buying caravans and going on holidays and conservatories and all sorts of stuff. There's no aspect in relation to this that is taxable because it's your money. It's not income. It's just release of funds from your property. So it's tax-free. You don't pay income tax on it. You don't pay anything else on it. And in actual fact, it can help in certain aspects of reducing inheritance tax, if that's what the situation is. So that you can save 40% on the money that you borrow, because obviously inheritance tax is only paid on your net estate. So it helps. I mean, a lot of people these days, their pensions aren't enough. And they actually want to increase what they want to do now. They want to basically give a deposit to the grandkids, to the kids in relation to property. They can pay the mortgage, they just can't find the deposit. It's this sort of thing that, a lot of times that people need help with. And because we don't sell, we advise, and we basically solve the problem with equity release, because there are numerous ways that this equity release can work.
How many of your clients might use equity release to fund, say, care home fees or domiciliary care fees or living
Well,
care?
let's take a couple. If they want domiciliary care, it isn't a problem. We can use what we call a drawdown scenario. What we're trying to do is to make it a least cost option. The least cost option would be a drawdown where, let's say they start, say the house is worth right down here, £700,000, and they are getting on in years, and they want a facility of £100,000 for sake of argument. Yeah. You don't need to borrow £100,000 straight away because you'd be paying interest on that money.
Yeah.
So what you'd be doing is you take out, say, 25, 25, 25, and 25 over a period of time. And then from that point of view, the interest is only accumulated on what you draw at the time. So you might have 4 small loans going on in relation to it, and the interest rates could be different. If everything's going well, the interest rate could be less than what you started at. So we're trying to basically look at it so that a client can use equity release for domiciliary care. Domiciliary care is fine. It gets a bit more complicated if one of them wants domiciliary care and one has to go into a care home. Again, you can use equity release for that because one party is still in the property. Problem comes if both of them have to go into care or one has to go into care, because that's a trigger that basically the lender needs the loan back. Death and going into long-term care trigger the aspect of the loan being recalled.
Graham, in the past, equity release mortgages and similar products have quite a bad reputation. So what's changed now for that to no longer be the case?
Okay, so 20 years ago, there were people who did equity release, and it was a very rigid product. Interest rates were high. I don't think it's a bit like having something that's new. You know, you used to buy a video recorder, it was like £1,000 at one time. Now you can get it for like 250 quid. But in the sense of the equity release, it was something that was new. They were feeling their way. You couldn't pay the interest. They wouldn't allow you to. So when you get interest rates of 8%, the capital balance will double in 9 years. And because you can't pay anything back, this is where a lot of people had a problem, because ultimately you're encroaching on family's inheritance. And this is really where the aspect of it all was that because it was so rigid, people didn't like it. The whole thing now changed. Part of the Equity Release Council is that there are a number of priorities that they use. One is being able to pay the interest on every loan that is taken out for equity release. You have to be able to pay at least 10% back if you want to. You don't have to, but it's the possibility of being able to do it. And then obviously, if you paid all the interest, the loan stays where it started in the first place. So if, for example, you had a £50,000 loan, just keep it simple, 5%, yeah, that would basically give you £2,500 interest over the year. If you paid £200 a month towards the interest, effectively you're stopping the interest accruing, and the balance will stay at 50,000. And as long as you do that, that's exactly what will happen. There is no term to equity release. The only reason the term will come up is if you pass away or the second person passes away and the second person goes into long-term care. So the whole thing has changed. The FSA, we are a very, very regulated industry. And every loan that we do, we are checked before it completes. Make sure that the advice that we give is correct. It would only be correct because anybody will do it, to be honest with you. There are times when I've said, no, I'm not doing it in relation to somebody wanted equity release. You have to, because that's the right advice to give to a client. You cannot just say, be an order taker in this industry. There has to be a reason behind what you do.
I hadn't realised what you just said there about the interest rolling up and within 8 or 9 years, the loan effectively doubling without the client being able to pay off. I didn't realise that was one of the main reasons why there was a sort of a scandal around it, and that it was considered to be a problematic product. I thought actually that perhaps excessive fees taken on behalf of brokers and things like that and lenders might have been the reason. Was that the case as well?
No, I don't think so. I don't think so. I think the aspect of the interest, because interest rate is fixed for life. So it starts at 5%. Whatever happens, it still stays at 5%.
Yep.
There are variable products, but we don't do them because you just can't guarantee where you're going. The thing about a fixed rate is you can put that onto an illustration to a client and go through with a calculator and actually work it out. So it's not a difficult exercise to do. And I think the aspect that it's fixed, people like that because they know where they are. And they know in 5 years' time, if, for instance, they don't make any payments back, that's how much they will owe to the penny. It's information again, because this is what we want to get over with clients. It is not something that is going to harm you. I use this analogy. People moan about Ryanair because they charge this, this, and this. If you know what the terms and conditions are, what's going to happen in relation to going from A to B, and you get on that plane, you're happy with that. We explain, and we have to explain all the terms and conditions in relation to that loan before the client decides to do something. They should also include their family, because it will ultimately affect them at the end of the day. Because if they make no payments, the rule of 72 says that if you have the 6% interest rate, the loan will double in 12 years, because you know that from mathematics.
Very good. Are there different equity release products with different features, or is the main differentiating factor the rate of interest?
There are two, I'll call them three different products. There's two in one and one on another one. Now, there's one which basically started all this off, which is called a home reversion. A home reversion is where you sell part or all of your property to an insurance company. Problem with that is that they don't give you the full value of the property. They need to make money. Okay. This is where I think a lot of it started 20 years ago. So let's say you had a house worth, keep it simple, £400,000. They might give you £70,000 for half of it, might give you £100,000 for all of it, but the rest is theirs. You're losing that. This is why it's an accident waiting to happen. It's a crisis waiting to happen in that sense. That's what happened.
And are those still on the market?
You can still get them for specific cases. Generally speaking, I don't see why you'd need one personally. I won't advise on them. The other way around is basically a lump sum loan and a drawdown, and you can mix the two.
Yep.
Okay. So you might have a facility of 100,000 and you take 50,000 up front. The lender has already agreed that the other 50,000 can be taken at some point in the future, whenever that is. And you can take anything from, depending on the lender, £500 a time. It's generally about £2,000 a day. There are no further checks. There are no further fees. There are obviously some paperwork to sign. And once that's all done, then the drawdown aspect of it will then go back, it will go into your account and you're off and away and doing what you need to do. In reality, nowadays, very few people will do, and I mean very few, will do a home reversion because I don't think they're a product that you should get involved with.
Do the loans differ in terms of the amount allowed that you can repay every year? So I think you mentioned 10%.
Yeah, 10% is the norm. There are plans where you can do 12%, and there was one at 40%. But generally speaking, the norm is 10%, including the interest.
What's the process for applying for an equity release?
In here, which is I don't know if you can see this. I know I got.
No, we can't. Oh, there we go.
There we go.
Anyway, we have this as an e-brochure as well for client. And in here, in actual fact, there is this. Can you see that circle thing? Basically, we would, if a client decides that they were thinking of equity release, yeah, obviously they've got to contact us in the first place. We can actually ascertain if they qualify, because obviously you need to be 55, property needs to be 70,000, etc. But there are certain times where, for example, where somebody has a property in trust for whatever reason. Okay. We can't do those because in actual fact, the person who is the beneficiary is not the owner of the property.
Effectively, you would have to have title to the house.
Yes. As would any mortgage nationwide, not Santander, anybody else. No difference in that sense. Would pre-qualify them. We then need to go through a full fact find because we can't give advice until we've actually done a full fact find to take out their situation. Why do they want it? What's coming in? If you've got £100,000 in the bank, why would you not use that first rather than equity release, for example? We would go through that. Once we've actually done the fact find, we can source the sort of thing that will help them. We then go and see them because I need to explain to a client the full implications of what they are suggesting doing. Because if they know, like the Ryanair example, and they're happy with it, then we can continue. They need to speak to their family in the meantime, because it will affect inheritance, for example. It can also affect benefits as well, actually. You're big on benefits because that's what your situation is. You have to be careful how you do it. You can still do it. You do it on a drawdown and keep the amounts that you take low. So you're actually within the parameters of the DWP. So there's all sorts of ways of doing it. So once we explain everything, they're happy to proceed. We will apply there and then over the internet to the lender. The lender will then basically approve it because we know it will work. Valuation gets organized and it's all on the valuation from the point of view of what can be raised. There are loan to value parameters in relation to age. Valuation's done, it comes back on target, they will issue an offer. That offer will have about 6 weeks life. In the meantime, I get the copy, the solicitor gets a copy that we will help them with, and the client gets a copy. They don't sign anything because the solicitor will go and see them at their home, at their convenience, to explain the documents that I've already explained. So this is where independent legal advice has to happen. Once that's happened and then everything's been signed and everybody's happy, documents go back to solicitors, everything gets sorted out as regards lenders, solicitors, loan gets paid out, and the client gets their money. And it takes about, maybe been 4 to 6 weeks.
In brief, Graham, how long can someone expect from contacting an equity release broker to actually having the money in their account? What sort of timescales, in your experience, can someone reasonably expect?
Quickest I've done it is 3 weeks.
Are you a member of any professional bodies or associations?
I'm a member of the London Institute of Banking and Finance. We take yearly tests in relation to make sure that we know what we're doing. So when you actually look on the bottom of my email address, the footer, you'll see certain shields. I'm a later life professional, certified mortgage advisor, and I have to do tests in relation to my competence every year through the network, the Right Mortgage Network, and also the London Institute of Banking and Finance. I'm also the member of the Equity Release Council. Obviously, then we have to uphold their principles. Like Principle 5, I was telling you about, being able to repay the interest. It's 10%. Every loan has, like, obviously FCA. So everything that we do is highly regulated and tested. It has to be. It's this sort of market, because people want confidence in what they're doing, in the people who are doing it.
That's great. Thank you. And if somebody wanted to make an inquiry to you, Graham, to find out more, how is best for them to do that?
Well, a couple of things. We have, I can give you some phone numbers. A lot of it's done these days on mobiles. We do have a virtual office in London, the No 207 number, which will then pass it through to me. I can then pass it through to Lisa, who can then help them, or I'll help them depending where it is. We got websites. All this information is on the email I can send you on the basis of contactability. We will actually help people even if they decide not to, because they need to go through the process of finding out information. And we do not chase people to do something.
You're more than happy to have a conversation with somebody who's sort of just in the very early stages of finding out
But
more.
these things are long burn. It could be 6 months. In fact, I spoke to a lady yesterday. I'd been speaking to her in July. She was talking about equity release. She wants to pay her ex-husband off. Well, things have been happening in the background, and yesterday she came back to me. So these things do take time, and we understand that. People know where we are. We don't go chasing them. I think that's a nicer way of doing it, personally.
Sometimes clients will call us with an inquiry. It could be the son or daughter of a client or the client themselves, and they have maybe had care for a few years, but then their care needs increase, and maybe because of lack of mobility or dementia or another reason, their care needs are such that they need a lot of care, and it might be suggested that they go into a care home or have living care, but they really don't know what to do. Is it only the homeowner who can arrange an equity release loan, or can the a power of attorney also do that?
Right. So obviously, where the client has mental capacity, then they can do it themselves. There may be times when that client has lost that mental capacity and powers of attorney have been completed and registered. That's the important bit. Then the attorneys take out the loan for the client under the power of attorney documentation they have.
That's wonderful.